Guys, how we doing? I'm Ryan Mack. Welcome back to Trading Guys. And sorry, I'm running a little bit late. This is Monday. Normally, I like to do my weekly review on a Saturday or Sunday. I've just been absolutely mobbed, and I have a new baby. Also, yesterday I planned to do it yesterday, and then I randomly had a funeral to go to. Obviously, someone died that we didn't expect, and then I had to go to the funeral. Blah blah blah. So. This week also coming up, I'm going to be away for this week. I'm actually going to climb a mountain for 4 days with Ollie Ollerton from SAS Who Dares Wins and Jimmy Narain from Mind Valley. So we're going to cover this today, and I'm also going to be covering the trades we're currently in, which is, we're still in, what's this, Euro USD. I'm still going to keep this here. My stop loss, you can see, look, I have not moved my stop loss. This is in a beautiful area here to start melting. Now, if it does come up, I'm still not fussed, because on the higher time frames, look, it can still potentially come to here. You see this candle here? Boom, reject here, and then melt. So what's really happening in the markets in times like this with Trump? I think it's the 2nd of April. So in 2 days' time, Trump is going to be releasing his tariffs and so on and so forth. So yeah, everything's just really up in the air just now. Still, I mean, it hasn't changed. You know, things have been up in the air for quite a while. You'll see most people are like, fucking hell, it's like 1 minute it's flying, next minute it's down, next minute it's flying, next minute it's down. It's perfectly fine, all right? It's perfectly fine. Let's see what we've got here. Let's just crack on, because I'm extremely busy today. I need to go and pick the guys up from the airport today, so let's just get through this, right? So, as we always start, remember to grab your notepad and pen. Write trades at the top, write strong, weak, and then neutral. I don't have my camera on today because my wife is like walking behind me breastfeeding and stuff, so that's why I've turned my camera off. As you know, if you're someone who watches the videos each time, you know that I cover each economy individually, or each currency individually, apart from AUD, China, and NZD, and that's because they're all very closely correlated, okay? I won't get into the details of why that is. I cover it in tons of videos, and I want to hurry up today. So, last week, NZD 49.1 has changed from bullish to bearish, like I said. So, if you remember, that I want to cover this. If you remember, the last couple of weeks, and we've had, like, bullish numbers from NZD, but I did say to you, right, these are just bullshit bullish numbers. They're just short-term bullish numbers. It does not mean by any means that the New Zealand economy is bullish, okay? Overall, it's still pretty much fucked. It's had a couple of weeks of decent numbers, but it's still remained weak for me, okay? Because of the larger context of things. China has shown weak numbers. Industrial production has dropped. So don't be, when you see this here, green, right? Like I always say and explain to people, many people that don't understand how to read and interpret these numbers will see that that's green, and they'll be like, oh, green, okay, that must mean good, you know, so bullish. No, it's not. That is bearish. Why? Because look at the previously, it was 6.2. The numbers came in worse. It's came in at 5.9. That's much worse. So why is it green? Well, it's green because they anticipated it to have a massive drop to 5.3, and it's came in better than they anticipated at 5.9. That's why Forex Factory shows it as green, okay? So don't be tricked into thinking that is bullish. It's not. Yes, it's better than forecast, but it's still a big drop, okay? Retail sales year on year, 4%, that's increased. That's a good increase. Fixed asset investment is increased. That's good. So bearish, bullish, bullish. Unemployment rate has increased in China, so that's bearish. So this is what you're calling mixed data, you know? Bearish, bullish, bullish, bearish. That's what you call mixed data. It's chopping and changing. Leading index has increased slightly. GDP has increased slightly, but it's still, you know, at fuck all. Westpac consumer sentiment has decreased. So that basically means, like, our consumers gonna, how do they feel about the economy? Are they happy about the economy? Do they think the economy is good? Do they think it's bad? So you can clearly see even the people who live there think the economy is fucking shit. Current account NZD has increased slightly, but it's still -7, right? So it's increased from -10 billion to -7. And it's worse than they expected, okay? So that's not good. So they're in a deficit. Okay, they're not in a surplus. They're in a deficit. So when it comes to like current account, trade balance, blah blah blah, you're looking at surpluses and deficits. This is a deficit. So what does the current account mean? Why is the current account different from trade balance? Well, current account is when people keep spending money in their own country, the current account builds up. And obviously, if their government is using too much of that money, it will then go into a deficit, right? So that the government's spending too much money. People aren't spending enough money in country, and the government are spending too much money of the money which is there, or in this case, which isn't there. So they're in debt. Same GDP quarter on quarter. GDP has grown very slightly. Employment change. Employment is massively down in Oz. Unemployment rate has remained sticky. Trade balance NZD is good. So that's in a surplus. That means that they are exporting more than they are importing. Now, what does New Zealand export? They export predominantly dairy. So meat like lamb, New Zealand lamb chops are very famous. Milk, butter, blah, blah, blah. Okay, it's heavily reliant upon dairy. I think there's actually more sheep in New Zealand than what there is people, if I'm not mistaken. Credit card spending is down, so not good. So for me, I'm keeping NZD in weak, and I'm going to keep AUD in neutral. Like I always say, you don't just move things every week when numbers change. You have to look at the bigger picture, and nothing has really changed in the bigger picture for me. Oh, that was the week before, God. So just last week, we've got flash manufacturing PMI 52. So that's bullish. That's good. That's bullish. Don't tell me, was I looking at it last week there? Fuck my life, I was looking at the previous week. Anyway, well, that's an even better review because we can look deeper. So last week we had 52.6, which is a great increase. 51.2, which is a great increase. Bullish. CPI, bearish. Year on year, CPI is the one that we really want to look at. It gives us the real numbers. This gives us the kind of, what's happening each month, if you like, but this gives us the overall year. So overall, the economy is coming down, right? CPI leading index is still bearish. So that's a bit mixed data. I'm still not changing AUD from neutral, even though these are good numbers. I mean, it's fantastic to see the growth, right? It is growing. So hopefully we start to see other numbers growing, like CPI, PPI and everything in a few weeks' time. And at which point, if we see it growing, over multiple weeks, we can then change it from neutral to strong and so on, okay? So you may see, this week, mid-term, short-term strength. So you might see that Aussie starts showing strength, just now, but it's only on like the 30-minute time frame, the week, the hourly time frame, and so on. We're talking about the weekly time frame, right? You're not going to see this kind of strength on the weekly time frame from AUD as of yet, okay? But yeah, short-term, 15-minute, 30-minute, 1 hour, you may see some short-term strength, okay? Inflation gauge up. Inflation is increasing. Confidence dropped, but still bullish. Private sector credit card spending month on month is the same in Oz, pretty stagnant. China manufacturing PMI has increased, bullish. Non-manufacturing PMI has increased, bullish, so that's nice. So when we see China increasing manufacturing stuff, it shows us that Australia will also grow, and you can see that here, look, previously, right? Previously, and if you look at last week, look, when China's manufacturing grows, Australia's manufacturing grows. This is a perfect example, right? Look, you can see China has grown, boom, it's increasing, and when that increases, Aussie increases, okay? See, look, and it's a direct link, because when manufacturing increases in China, they have to buy all the stuff for manufacturing: steel, iron, copper, nickel, silver, gold, blah, blah, blah. They buy it from Australia because Australia is a heavily mining reliant country, okay? They heavily rely on mining, and that's why you see the growth, all right? It's called positive correlation. When China goes up, Aussie goes up. When China goes down, Aussie goes down. And with the USD, Aussie is generally negative correlation. So when the Aussie is going up, USD will come down. When USD is going down, when USD is going up, Aussie will come down. All right. In general, of course, you need more context than that. But moving on, lads, what have we got this week? Cakes and manufacturing PMI, want to see that. Retail sales, yep. Cash rate, want to see if we're going to cut rates. They forecast to keep the rates the same. Yeah, there's not much. Okay, there's not much else. So I'm still keeping NZD at weak and AUD in neutral. Okay, if I see the AUD in China growing for the next couple of weeks, the next 2, maybe 3 weeks more, I will then obviously change that, shift it into a strong sentiment. Okay, moving on. The first one always takes longer because we're covering 3 currencies, and because I did an extra week. Let's see this week. So last week we don't need that one. Yeah, last week we do. Okay, CAD GDP is growing slightly, but it's month on month, so we don't really care, right? So there's not much news there for Canada. Come on. Why is this taking ages? Come on, fuck's sake. There we go, finally we got there. What we've got here. So this week we've got manufacturing PMI, we want to see that. Previously it was bearish. Anything below 50 is bearish, anything above 50 is bullish, okay? OPEC, JMCC means trade balance, so we want to see that. They are forecasting to be less. This is all because of Trump's tariffs and blah, blah, blah. They're obviously trading less with the US, right? Employment change, they're expecting an increase. Unemployment rate, they are expecting an increase. So again, remember I always say it, and I said it 2 seconds ago, you don't just change just because you've got a little bit of good numbers, right? You need to see a solid change. Obviously in relation to swing trading, i.e. trading for long term, okay? Yes, when the numbers change weekly, you will see these little changes in direction on the lower time frames, 5 minute, 15, 30, 1 hour, blah, blah, blah. But 4 hour, daily, weekly, monthly, you really want that kind of long consistency, right? So I'm going to keep Canadian dollar in neutral, and this week will be a pretty big week because, like I said, on the 2nd of April, Trump is releasing more tariffs, and I'm pretty sure that's going to have a big impact on the Canadian dollar, okay, because they're one of the US's biggest trade partners. Okay, moving on. CHF, you know, I always keep CHF in neutral, guys, because it's more, it never has any news that changes things within the market. You know, what, manufacturing PMI or services, none of that really affects CHF. It's a highly services country, and what really affects it for trading is the sentiment of the market. So if the market is risk on sentiment or risk off, that's when I tend to trade CHF. Other than a change in sentiment, I don't really trade CHF because of those reasons, okay? It's always a good solid currency because their economy is always solid, okay? It's why they say it's safe as Swiss. It's Swiss. It's a really safe place to put your money when the world is very unstable, okay? So that's why people use it. But I always just keep it in neutral, all right? Moving on. I keep it in neutral, and then if the world changes from risk on to risk off, then I look to trade it against weaker economies. Let's have a look at last week. Fucking hell, we've got loads this week for the euro. So last week for the euro, I'm just going to fly through it, right? We don't need. I'm not going to discuss what each thing means because I really discuss that in every video. If you want to jump back and have a look, and I want to be quick today. So look, bearish, bearish, bearish. Do not be fooled that just because this has went from 45.8 to 48.9 and it's green, do not be fooled that that's bullish. That is not bullish. Yes, it means things are getting better, so that's quite good. However, anything below 50 still means bearish. Anything above 50 means bullish, okay? And likewise, just because this here has went from 51.1 to 50.2 does not mean that it is bearish. It means things are getting worse, yes, but it is still remains bullish, okay? However, bearish, 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 bullish, bearish, bullish, but things are getting worse. That doesn't really affect it. Who cares? Who cares? Bearish, very bearish. Money supply slightly bullish year on year. Private loans have increased, so that's quite good. Bearish, bearish. Bullish. Don't be fooled that it's red. Look, it's better than before, so it's bullish. They just thought it was going to be 0.3. It came in worse than what they thought, so it's red, but don't be fooled. Spanish CPI bearish. German unemployment massively bearish. Okay, so the Eurozone is really in the fucking hot locker for me. And again, I'm keeping it in weak. There could be arguments for it being neutral and stuff, but really for me, I'm keeping it in weak. In my opinion, it's fucking weak all day long. Okay. Let's have a look at what we've got this week. We have got CPI this week, guys. We've got prelim CPI, CPI. We've got services, PMI. We've got a big week for the euro, and if I'm not mistaken, this is also NFP week. Okay, so bear that in mind for USD pairs. Oh, sorry, next week. Yeah, so this week we've got a lot of news. Euro is remaining in weak for me. Okay, moving on. GBP. Last week. Let's see what we've got. Flash manufacturing PMI, so bearish, bullish. Now the difference between these is, look, when we see manufacturing PMI being bearish, we don't mind. Yes, we take it into consideration, but we don't mind. Why? Because the UK actually isn't a manufacturing country. Okay, and this is probably going to get worse because I believe, if I'm not mistaken, this week's news, Labour government have just announced they are about to close the only last two remaining steel production facilities in the UK. So that's fucking disastrous. Okay, it's going to get even worse. But that's bearish, that's bullish. Okay, we are a services providing country. Why services have increased, I have no idea, because the UK is a fucking shithole. So I don't know why people are choosing to do services there. But it is what it is. CPI year on year decreased, bearish, bearish, bearish. HPI year on year bullish. That's just homes, mortgages. Bearish. Don't be fooled that it's green. Massively bearish because it was previously 1.4. Current account massively bearish. So the government are increasing their spending. That'll probably be to do with all this Ukraine bullshit and paying for illegal immigrants to live in fucking 5-star hotels, £6 million a day. The fucking idiots. Good trades balance is also bearish. Revised business is slightly bullish. So, yeah, the UK is still pretty fucked for me. This has been a few weeks in a row now. It's been at neutral. I'm going to shift it across now to weak. I'm now moving pound across to weak. Last week, in the last couple of weeks, it was neutral. I'm now shifting it across the week. So we've got yearly CPI showing massive drops and everything else is coming down. Okay, so I'm moving it to weak. GBP, daylight saving time. What have we got? Mortgage approvals, net lending, blah blah blah. We don't really have much this week. I've got some PMI. We don't really have much news this week for the pound. Okay, so moving on. We've only got two more, Japanese yen and then USD, guys. Let's look at last week. Again, yen, weak, bearish, stable, but still weak. SPP year on year, bearish, slightly bullish. Tokyo Core CPI. So it's a bit of mixed data. Last week I moved it across to week, and I'm going to keep it at week, guys. It is shit. Sorry. What am I doing? Let's have a look what we've got this week. Come on. Don't bloody stall on me now. What we've got coming up this week. Prelim industrial production month on month has increased. Retail sales have massively decreased. Means people aren't spending money. I've got a couple of manufacturing details, household spending, etc. Okay, so it's still weak. It hasn't changed. Definitely weak. They just can't catch a break, the Japanese economy. I'm just going to fly through USD because you can see we've got a lot to get through. Bearish, massively bearish, but that's because of the tariffs, right? Bullish, bullish, bearish, 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 bullish. Don't be fooled because it's red. Bullish, bearish. We don't care about that. Bullish, bullish, bearish, 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 sorry, bullish, 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 bullish. Don't be fooled that it's red. Bullish and bullish. Okay, so we are pretty much overall still fairly bullish. Yes, we have mixed data, but USD is still massively strong for me, guys, and we have NFP this week, so let's have a quick look. So we've got a lot tomorrow. We've got PMI, etc. Jolts. Jolts is very important. Job openings. Yeah, and NFP is unemployment claims, trade balance, services PMI, average hourly earnings, non-farm payroll, blah blah blah. Okay, so we've got a lot this week, and unfortunately, I'm away this week, so I won't be able to update you as it goes. So just keep an eye on, okay? What we're doing, guys, I have just opened a new office and podcast studio, etc., and I'm going to be doing tons upon tons of live education from there as well on a pretty much a daily basis. Okay. When you subscribe to the YouTube channel, wait, I'm just going to show you right now. Give me 2 seconds. Let me see what one we're on. Yes, okay, so let me just look at the channel. I don't know why my internet's so slow. It's not normally this bad. Okay, when you come across and you hit subscribe, I don't know why it's not shown here, maybe because it's obviously my channel. There is a little bell, right? There's a little bell. Hit the bell for notifications because I'm going to be doing a power of live trading sessions. So I'm going to be I'm literally going to be trading this managed account live in front of your face, okay? So you can copy my trades whenever trades come up. So if you don't hit the bell, whenever I go live, you're not going to get the notification about me about to live trade, and you're only going to get to see the video later once I've already closed off the live. You're then going to see the video and be like, oh shit, I've missed it, okay? And it's going to be too late for you guys to copy my trades. On the live trading sessions as well, you'll be able to ask me as many questions as you like, and I'll read them from the comments and I'll answer your questions in real time, okay? And you can watch, so you can see that everything we do is actually real, live and transparent, okay? We're not fucking bullshitters. We're not get rich quick scheme guys. Yes, of course we have losing trades. That's perfectly normal, but you can get to understand the markets as they go, okay? Let's have a look. Also, for anyone, as I always say, this is the one that I predominantly use on a daily basis for trading data and so on. The only reason why I use this is because it's much easier to change the countries than this one, okay? But this always, trading economics gives you far more information than Forex Factory. Let's have a look at this one here. Let's see what we've got. Let's just pick a random pair because I want to see Euro USD. So I also use this. This is called Prime Market Terminal. I get my data from here. Now, you will notice that if I come across here to Smart Bias, the bias here will be different from mine, okay? It will be different from mine. Why? Because these guys change it every week. These guys show the bias based upon the day-to-day, week-to-week movement, okay? Apart from that, they don't look at the bigger picture, okay? So that's why this here is different from mine. It's very important to understand that. And it doesn't mean this is wrong, okay? This is highly accurate. It's very right. But it's right based on people who are trading 15-minute time frames, 30-minute time frames, 1 hour time frames. Mine's is correct based on weekly, monthly, entering a trade now and closing it in 15 weeks time. You know what I mean? These guys are correct if you're entering a trade now and you're going to close it in 20 minutes. You know what I'm saying? Or you're going to close it, in 4 hours or something like that, okay? So, we have got, let's see, wait, I'll move this. Sorry. Let's see what we've got. Banking research. So we've got tons of data that you can use on here. You don't have to, worry about everything. Just have a look, see what they've got. Banking, bring it up, and it's going to tell you here. Overall, USD, they've got it as neutral. So I've still got it as strong. They've got it as neutral for this week, which I would agree with. I would agree. USD is definitely neutral for this week. But overall, the bigger picture is strong. Euro, neutral. What have we got? We've got Euro, weak. Definitely weak. GBP, we have got GBP weak. They've got it down as bullish for this week. But remember, as I said, this is the short-term sentiment, okay? CAD, they've got bearish. We've got bearish. AUD, they've got bullish. We've got neutral, which is fine. NZD, they've got, everything's dog shit, which it is. Let's have a look at that. It's just pure bearish, isn't it? And what are the banks saying on that? Yeah, they've just got it as bearish. Yeah, NZD is fucked. Japanese yen, they've got it as neutral. I've got it as weak. And CHF, they've got it as neutral. I've always got it as neutral. So, yeah, don't let this confuse you, okay? I'm just showing you it to show you the different aspects of trading. Don't let it confuse you. So that's pretty much it, guys. I hope you enjoy the channel. Don't forget, come across here to the Trading Guys. I'm going to be pumping out mountains of content as of... not this week, but the following week once I get back from my trip, okay? Have a great week. Don't overtrade. Be very careful this week. Markets are still completely dog shit, guys. Don't worry if there is not a trade there. Don't take a trade just to feel like you're in a trade. If there's something there, take it. If you're like, fuck, is this going long? Is it going short? And you're getting confused, then just fucking bin it off, all right? You don't have to be in a trade every day, okay? As for Euro USD, I'm letting it run, okay? My stop loss is here. I will let that come back up and hit the stop loss. I don't give a shit because I don't over risk. And if this hits the stop loss, I will be losing $271 on a 158 grand account. It's fucking, it's nothing, And when it comes in, this will be over about $1,500. So, happy fucking days. When you keep conducting trades like that, having small losses really doesn't matter because my risk is always tiny. My potential gain is always much larger. Okay? I'm Ryan Mac. This is Trading Guys. Thank you for watching. Have a great week and be safe. Don't over risk, don't over trade, and take care.